A corporation is usually known to have an overall high tax obligation, especially when double taxation comes into play. But have you ever wondered why entrepreneurs, despite the notorious double taxation reputation, often choose C corporation status? It turns out there's a hidden gem within C corps that can significantly slash your tax burden, sometimes even more than S corporations or other pass-through entities. What is so enticing about C-Corp and the ability to achieve significant tax savings? Keep on watching to find out, as today we're diving into the 6 of the ultimate strategies you can use to minimize C-Corp tax liabilities. All right, let's get started with the first strategy to minimize a C-Corp tax liability, which is everyone's favorite: tax credits. Tax credits are dollar for dollar reductions in the amount of tax a business owes. The US government offers numerous tax credits to encourage businesses to invest in public interest areas. Tax credits directly lower a company's tax liability, providing more valuable savings than deductions, which only reduce taxable income. Common credits include the research and development credit, energy credit, and the work opportunity tax credit. For example, if your company invests in sustainable energy practices, you could qualify for energy credits. Similarly, if you're developing new products, the R&D credit can significantly cut your tax bill. Remember that tax credits differ from deductions because they're subtracted directly from your tax liability. So make sure to explore all the available credits to maximize your savings. Next up is the second strategy for minimizing tax liabilities for C-Corps, which is everyone's favorite money-saving hack: tax deductions. C-Corps can reduce their taxable income by deducting various business expenses. Think of travel expenses, equipment rental, utilities, health plan costs, consulting services, and even charitable contributions. For instance, if your C-Corp donates to a qualified charity, you can deduct up to 10% of your taxable income. And if you exceed this limit, you don't have to worry, since you can carry over the excess to the next 5 years. This not only reduces your current tax liability, but also helps manage future tax bills effectively. So the next time you're working on your C-Corp taxes, don't leave a single deduction unplanned. Now, let's talk about the third strategy to turbocharging your tax savings with accelerated depreciation. When your C-Corp purchases equipment, you can choose to deduct a larger percentage of the asset's value in the early years if the asset is located within the US. This strategy allows you to reduce your tax bill significantly during those initial years when the investment is fresh. Imagine you've just bought new machinery for your manufacturing business. Instead of spreading the deduction over several years, you opt for accelerated depreciation and claim a bigger deduction up front. This reduces your taxable income more effectively in the short term, freeing up cash for other business needs. On to strategy 4, salary distributions. One smart way to minimize taxes is by distributing income as salaries and bonuses instead of dividends and getting hit with double taxes. Salaries and bonuses are deductible expenses, which means they reduce your corporate taxable income. For example, shareholders who are also employees can receive reasonable salaries and bonuses, lowering the company's taxable profits. This is particularly beneficial because while salaries are subject to payroll taxes, they aren't subject to the double taxation that dividends face. The key here is to ensure that the salaries paid are in line with the services provided to avoid IRS scrutiny. And that's not it. Salary bonuses and fringe benefits are tax deductible for your corporation, but they also keep your shareholders happy and well compensated. It's a win-win situation. Let's move right along to strategy 5 of minimizing C-Corp tax liability. Strategy 5 is to deduct business losses. If your C-Corp experience losses, you can use these to offset future tax liabilities. This is especially useful for startups that might incur significant losses in their early years. For example, if your company has a net operating loss this year, you can carry forward these losses to offset future profits. However, such losses are limited to 80% per year against your profit. This flexibility allows you to strategically reduce taxable income when your business starts to turn a profit, providing a cushion as you grow. Whether you're deducting losses in the current year or carrying them forward to offset future tax bills, C-Corps offer flexibility that can keep your bottom line healthy, even in the face of adversity. So don't let a little setback hold you back. Embrace those losses and watch your tax bill shrink. Last but not least, we've got strategy 6, which is income splitting. This strategy involves distributing income between the corporation and its shareholders to keep both parties in lower tax brackets. While this doesn't eliminate double taxation, it can reduce the overall tax burden. For instance, if your C-Corp and its shareholders are in different tax brackets, you can distribute income in a way that minimizes the total tax liability. By carefully planning how much income each party receives, you can optimize your tax situation and potentially save a significant amount. And there you have it. Powerful strategies to minimize your C-Corp tax liability and keep more money in your pocket. By leveraging these techniques, you can supercharge your C-Corp tax savings and ensure your business thrives financially. Navigating C-Corp taxation can feel like a complex maze, but that's where Cleer Tax comes in. Our team of experts is here to guide you through the process, helping you file your taxes accurately and on time, while avoiding costly penalties. We make managing C-Corp tax filings easier than ever. If you want more insights and advice on maximizing your tax savings, book a consultation with an expert at Cleer today. Our knowledgeable team is ready to assist you with all your C-Corp taxation needs. If you found this video helpful, make sure to give it a thumbs up and subscribe to our channel for more tips on managing your business taxes. Don't forget to hit the bell icon so you never miss an update. If you have any additional questions or need more details on any of these strategies, drop them in the comments below. We're here to help. Thanks for watching the video, and we'll see you in the next video.